Hi, my name is Denise Martin, and this is the Management 3600 Group 5 debate. This is the rebuttal to Pro IPO. With the economy on the mend, it's time for more businesses to launch IPOs. This is not the right time for companies to pursue IPO status because it is uncertain whether the U.S. economy is truly on the mend or at an inflection point headed towards another downturn. In order to generate significant capital at first offering, IPO underwriters target institutional investors who purchase large chunks of stocks and stock options who demand on average a 25 to 30% controlling interest or placement of their own people on the board of directors. A founder risks incremental loss of control to predatory companies if they lose track of stock ownership percentages. Access to capital is not loose since many large companies such as GM, DuPont, and Northrop Grumman still hold liquid assets close to vest, targeting only specific technologies that might be useful as horizontal or vertical acquisitions. The sequester has sent many of the large government contractors into complete hanging order mode with an eye aimed towards further downsizing. NGC has laid off 200 engineers in California alone. Vulture capitalists and angels often want 30% or more control, plus load up your staff with their associates. Many of these companies wind up with well-decorated offices and beautiful buildings that don't churn out a viable product or service at all. They often go bust within the 5-year make-it-or-break-it time frame. Today, the majority of risk control is a function of some very slick bookkeeping. Samsung is very good at spreading out interest payments among its lenders so as not to concentrate debt in one single department. This is expensive booking and requires in-depth knowledge of unrelated division operations as well as knowing where the bank interest rates are going. Growing internationally with a business should occur either before or after the initial public offering to avoid culture shock. The European Union, although a fantastically large market, is still unstable. Banking is done locally, where in the U.S. companies can pick and choose nationally among varying lender types who offer more options. Italy, Greece, and Spain continue to be struggling economies with no relief in sight. Australia and China are closed markets with few exceptions, whose goal is export rather than import. Google has a price-earnings ratio of 54.8. However, markets are segmented and we should compare apples to apples and look at the overall picture. Analysts expect Google's earnings growth over the next few years to range between 23% and 62%. However, Coca-Cola currently has a PE around 21, yet analysts expect Coke to grow earnings at 8%. General Motors is hugely underfunded pension and health care commitments, which doesn't get recorded on their income statement. The economy is still volatile, and many stock market segments appear to be overvalued. This is not an opportune time to risk control, expense, and business focus in order to underwrite an IPO.